Imagine a world where no human ever touches your money, where the teller behind the counter is replaced by an algorithm, the loan officer by an AI, and the entire financial system is controlled by lines of code, self-learning, ever adapting and always calculating. It sounds like science fiction, but it's happening faster than anyone predicted. What if the bankers of the past, the Wall Street executives, the regulators, the human decision makers were no longer needed? What if robots not only handled money, but made the rules of finance themselves? This is the story of AI and the future of money, a journey that begins with the invention of banking, evolves into digital finance, and now threatens to redefine the entire economic order. And the question we have to ask is simple: are humans about to become obsolete in their own economy? To understand the rise of AI in finance, we first need to understand the history of money itself. Banking began thousands of years ago as a human endeavor: gold coins, grain loans, and handwritten ledgers. Decisions were made by people with judgment, intuition, and sometimes bias. Fast forward to the 20th century, banks became massive financial engines handling trillions in assets, yet humans remained the gatekeepers. Everything changed with computers. In the 1960s, mainframes began processing transactions at speeds humans could never match. By the 1980s, banks were using automated teller machines and electronic payment systems. Money was no longer just physical, it became digital, and wherever digital money flows, algorithms follow. Banks didn't just want speed, they wanted accuracy, efficiency, and profit maximization, and algorithms delivered. By the 2000s, AI wasn't just a concept, it was powerful and practical. High-frequency trading algorithms could make thousands of trades per second. Credit scoring models could determine loan eligibility faster and more accurately than any human officer. Fraud detection systems could identify suspicious transactions before they even happened. AI in finance wasn't about replacing humans yet, it was about augmenting them, but augmenting humans is a dangerous first step. When algorithms are given decision-making power, mistakes can escalate quickly. Consider the 2010 flash crash when automated trading algorithms caused the Dow to drop nearly 1,000 points in minutes, erasing billions in wealth, and humans could only watch. AI doesn't sleep, AI doesn't forget, and AI doesn't feel. Banks realized that if machines could outperform humans in accuracy, speed, and profit, why keep humans at all? The breaking point comes when AI moves from tools to decision makers. In 2015, major banks began deploying robo-advisors AI programs that could manage investment portfolios without human intervention. By 2020, billions of dollars were being handled entirely by AI algorithms, predicting market shifts, balancing risk, and reallocating funds in real time. Even loans, once a human-driven judgment, were automated. AI could analyze millions of data points: income, credit history, spending patterns, even social behavior to decide who gets a loan. Humans became observers, not operators. But this transition exposed a new vulnerability. The system became only as smart as the algorithms themselves. Mistakes in data or design could ripple across the global economy in seconds. One small coding error, one misread market signal could trigger a financial tsunami. Automation promised efficiency and profit, but the real world is messy. Algorithms don't understand human panic, political unrest, or irrational consumer behavior. They follow patterns, probabilities, and data trends, which can be dangerously misleading. Consider the 2008 financial crisis. If AI had existed at scale, some argue it could have predicted it, but others warn that automated systems might have amplified it faster. And that's the paradox. AI can be brilliant at optimizing, but catastrophic at understanding context. In 2022, a major AI-driven hedge fund lost $500 million in 24 hours due to a coding error interacting with market volatility. Humans scrambled to intervene, but by then, billions were already in motion. The lesson: AI isn't infallible. It's faster, smarter, and more precise, but not wiser. Governments and regulators have tried to control AI in finance. Rules have been proposed: algorithmic transparency, ethical AI frameworks, human-in-the-loop decision mandates. But enforcement lags behind innovation. Every time a new regulation appears, a new AI model finds a loophole. Banks can tweak algorithms, optimize tax structures, or automate compliance itself. Meanwhile, the human workforce shrinks. Tellers, loan officers, and traders are being replaced by software. Some experts predict that up to 50% of traditional banking jobs could vanish in the next decade. And when humans retreat from decision-making, who holds accountability when mistakes occur? AI in finance is not an isolated phenomenon. Across industries, automation is reshaping the global economy. Manufacturing robots replaced assembly line workers. AI lawyers draft contracts. Algorithms manage logistics, marketing, and even healthcare. In finance, the stakes are higher. Banks aren't just institutions, they are pillars of national economies. The US Federal Reserve, for example, now monitors AI-driven trading systems to prevent systemic risk. But as AI grows more autonomous, predicting its actions becomes increasingly impossible. Some startups are even developing fully decentralized AI bank systems with no human oversight at all. In this emerging reality, money is no longer just a tool, it's a dataset that feeds intelligent, evolving systems. And humans? We're observers, regulators, and increasingly vulnerable participants. So what does this history and modern trend teach us? Takeaway 1. Speed and efficiency are double-edged swords. AI can process trillions in seconds, but mistakes spread just as fast. We must respect its power and prepare safeguards. Takeaway 2. Humans still matter in ethics, oversight, and judgment. Algorithms are brilliant at numbers but blind to morality. Accountability, transparency, and human values cannot be coded away. Takeaway 3. The future of money is not just digital, it's intelligent. AI won't just replace bankers, it will redefine how money moves, how risk is measured, and how wealth is created. The question isn't if AI will change finance, it already has. The real question is, will humans retain control, or will algorithms shape our economies and our lives for us? Money is evolving faster than our laws, ethics, and intuition. And for the first time in history, the decisions about our wealth may not be made by humans at all. One thing is clear: knowledge is power. Understand AI, understand finance, and understand the choices we must make before the robots take over. If this story gave you a glimpse into the future, share it, because tomorrow's financial system depends on what we do today.